Good morning, everyone. So let's analyze the market playbook. I call it a playbook because this is a repeatable pattern in the market. I normally use it to know where we are in the market. I always use the monthly chart and weekly to analyze this. It helps me to know where we are in the market. So this is SPX. I will also say this: if you are finding it difficult to trade individual stocks, you can just trade SPY and QQQ. You can trade the triple SPY, which is UPRO, or you can trade the TQQQ, triple Qs, which is leveraged. So you have to do what fits you. If you know you can be able to analyze individual stocks to be able to buy at a better price, you can buy the general market, which is the SPY, QQQ, and Dow Jones. So let's look at the general market playbook, how the market actually plays out. It helps us to know where we are in the market. So when you look at this, normally whenever the monthly chart breaks this 10-month moving average, which is the orange line. Okay, I will explain to you. This orange line is MA10, that is the monthly average 10. Then that is the moving average for monthly 10. This one is MA20, the moving average for 20. This is MA150, which is the moving average for 150. So the market plays in the monthly to tell us where we are in the market. If you watch out here on this particular candle, let me draw it. This particular candle, let me make it white so that this particular candle, this MA10 was broken. This moving average 10 was broken. That resets this market. So when it resets, what am I looking out for? I am looking out for another move that will break it back to bring it into this that can bring it above this MA10 as well. And there is something I want to point out here which I have found consistent. That is, whenever the market breaks MA10, you can mark it out. You can mark it out. Any break above it, if the next candle becomes the green candle and break and close above it, is a very good buy point. So let's analyze based on this monthly and see how it played out. After the market broke down here, we broke above this MA10 and closed above it. It becomes a bullish for buying. So let's go back. Here also it broke same, but I want to tell you something that happened here. From this point we started to break down. We broke down and it came up here, but we didn't close above it. So the market continued down. And then here we also broke above it and we didn't close. We also closed below this, so the market didn't continue. And then here we broke above it, we held. This did not break below this MA10, and this one finally closed above it, above this particular candle. This close, the close of this is 40, you see here, is 4076, and the close of this is 4109. So this one closed above this, so it becomes a buy. Now when we buy, the first thing we have to do is to put our stop loss below this particular candle that broke above this MA10. So this is where our stop loss will be. and now we have broken above it. Okay, so we buy on this next candle here. When we buy, what we are now, two things will happen. One, the market can retrace back to this 20 MA and then hold, and after it retraces back to this 20 MA, it will hold and break above again and continue. The next hold or the next rest will be above this MA10. So you start to hold and until you break again. Once you break this MA10, it's telling you that the market is now resetting, you are out. So let's continue like that. So this one that happened here, this particular area that came here, is a reaction of this one trying to hold, because it came from below. Whenever the market comes from below this 20 MA, it can come to this. When it comes above it, it can hold and then continue. So let's also keep going. So after the market reset here, we came here and broke above. I also want you to make your own research. We came here and held above, and then this particular candle, this particular one closed above it, so it becomes a buy. And then when we move, we took a rest here. So whenever we move, we always take a rest. Especially whenever we come above this MA10, we take a rest. So remember, taking this rest can come to this 20 MA if it's coming from below. Let's assume, because this one now broke here and then broke back immediately. Let's assume we held a little while below this 20 MA. It can actually come to this 20 MA to take a rest. And even like this as well, it can still come to this 20 MA and rest. But just make sure that whenever you are doing this, once this happens, you put your stop loss just below this candle that broke above this 10 MA. So when we took this rest, we continued, and then here we broke, so we are out. Even this one, after we broke, this one broke back, but now it will have already reset. So the next thing we have to do is to wait that when this one broke above, we need to also wait to see whether the market really will close above this particular candle that broke above, which it didn't. So that means it's not going to work. That means we are not buying in. So let's come back here. Okay, let's continue first before we come back and then analyze where we are in the market. So looking at this one here, you can see that here the market broke here, right? This is where the market broke. So we have to start from where did the market break, so we can be able to know how to analyze. So this is where the market broke, and then it broke back here but did not hold. It didn't hold. That means it continued down. And then here, this particular one, it broke. Okay, this particular one, it broke and really closed above on the next candle. So we buy. And remember, it can retrace to this our 20 MA, the first move. Once we break and hold, we buy. Our stop loss will become just below this particular candle that break this MA10. That is where our stop loss will be. And then the market moves and it will come down. It can possibly come down to this 20 MA or at this 10 MA. But if it comes down to this 20 MA and move up, the next hold will be on the 10 MA. Now watch out what happened here. We closed, we moved, what, just only one candle. We came down to retrace, we retraced back to this 20 MA. We held on it and we also moved. And then also immediately we also came to take a rest on this 10 MA, which is kind of is showing you that this is a very weak trend. Then it now moved before breaking below here. So when you find out this kind of a trend, you already know that this trend is not that strong, it's a weak. And I want to point out that you see this second move after a hold is always longer than the first. It's always longer than the first move. So that is where you can actually double your account, because once you can be able to spot it out, you can be able to double your account, and then you can be able to follow it up And you don't need to actually wait until you break before you come out. You can start taking your profits slowly as you are going up. Especially for this one, you can see it started to take a rest very fast. So it will tell you that this trend is not a very good trend. It's not a very strong trend. But it's going to complete that same process. It has to complete the process before it will now start going down, which is breaking here, confirming this particular trend, move, came down here to hold, to be able to accumulate, take all this liquidity, and then continue, take a rest, and move, the final move before now breaking. So let's also continue here as well. This market broke here, so because we are going to from where the market actually broke, right? So the market broke here, that is reset from here. Here we came back, but here did not close above, so we're not going to buy, right? Then we also came here, and broke. We held here, but we didn't close above, and then here close above, so we buy. When we buy, our stop loss comes here, just below this candle that broke this MA10. Okay, the first rest happens on this 10 MA. You just move one bar and then start to take a rest, also telling you that this trend not so strong, but you have to know that the next move coming will be definitely longer than this first move, so you can have that assurance to be able to hold, to grab that move, or to double your account that particular time. Now it move and then start to take a rest again, and then start moving. Now you are actually seeing that, okay, the trend is following up. You are just taking your profit gradually, but you will be totally out when this gets broken, the MA10 gets broken. So also take a rest here, and then didn't also break and close below this 10 MA, and you are still in, but you have taken, you have to be taking some of the profits gradually, right? And then here it broke, you are totally out. So here you're totally out until another entry gives itself a room for you to enter. So we are now already in 2015, so we are still going back to where the market also broke, right? So here the market broke here, right? The market broke here, and then we came all the way here to break this MA10. Okay, I'm giving you a practical thing that is happening in the market. This is the market playbook. So the market broke here, and here it closes above, right? Here it closes above, so you buy on the next candle, and your stop loss is going to be here, just below this one. Okay, just here it will be your stop loss, this one. So when you now buy, remember the first retrace can come, because this market actually, you see where it's coming from here, right? So it can retrace. That is the first retrace. Okay, so don't panic on the first retrace. If you panic on the first retrace, you're going to miss the whole thing. So don't panic on the first retrace after the market have shown you what is happening. Once it gives you this room to enter, don't panic on the first retrace. Just relax yourself. Once your stop loss is well placed just below that particular candle that broke above the MA10, don't panic. So now the market now retraced to this 20 MA. This one retraced to this 20 MA and then continued. Right now, what we are now waiting for is you can start taking your profit gradually or little by little, and then you are waiting for anything that will bring about the break of this 10 MA. You are out totally. Anything that will bring about the close of this 10 MA, you are out totally. Here didn't close below it, so anything that will bring about the close here, you are out totally. Remember, this is on the monthly. Okay, later I'll tell you how I use it to read the market, like where we are in the market. So this is where it now break it, and then we are out before we now make this other analysis that we have already made, right? So we are also going back. I just want to take it back to wherever this market will take us. Okay, so here this is where we started on this one when it broke here, right? So let's go to where this market also broke. Here on this one, it's also broken, and then it broke back here, but this one did not close above it, so definitely we're not going to buy. Okay, and then this one broke. After this one broke it, and this closed above it, so we're going to buy. Okay, so when we buy, we just observe that it didn't actually move that fast. It came here and then held and then broke. So this particular one failed, but remember our stop loss is still here. Okay, this one came down to this particular area. This is the first rest. Like the first rest is taken. Some people might get scared and then jump out because it's actually this on the monthly and then gone down this much. So you can actually get scared. You don't want your stop loss to be taken out. Or some people who have the mind to hold can actually stay and then watch the market play out. But I won't lie, personally, once this market have gone up this and then start to break like this and then breaking this 20 here, which is breaking the rule, which is supposed to hold, I'm going to be out. And then the next reset, I'm going to enter. That's how I'm going to play it. So this is the one time where it came to this our 20 to hold and broke and actually held, but it will surely cause fear. And you're already in some profit. When it was going up, you are already in some profit, and then now you are seeing yourself going into loss. You don't want to take it, right? So definitely it's going to cause some panic and fear, because we all are human beings with emotion. So it's going to cause some fear. So I wouldn't want to run into losses. I will have to be out and then wait for a retrace, because what I expect is when the market goes up like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in this area, I am not expecting this to actually retrace to 20 MA anymore. I am hoping it will only retrace to this 10 MA, because it has already gone up, and besides, it wasn't coming from below. You see, it wasn't coming from below this 20 MA. It's coming from above this 20 MA. So breaking this one is kind of taking a rest, and that rest failed, and this is where I'm going to be out, because it's already not coming from below here, so it has no reason to start breaking below it, and I'm going to be in the market. No way. It has already broken the rule. So as soon as I see this, because had it been, let's say we are coming from below this 20 MA and then we are tracing back to this 20 MA to hold, okay, fine, I will understand that this is normal. But we are coming from above this 20 MA, which means we're moving from 20 MA. The next rest should be around this 10 MA, and we have gone up in kind of quite a bit that it doesn't supposed to start retracing to this 20 MA to hold. So I will actually be out on here to protect the little profit which I have. And normally I won't even let the market run once I start to see the red candle that breaks below this particular candle, because I'll be tracing it every month by month. Okay, here is the close, here is the close, here is the close, here is the close, and now this one is breaking below the close of this particular candle that is green. I'll start taking some profit out already, like 50% profit to be out, to see what the market is trying to do. So let's come this. So this is around 2008. So let's see how the market did in 2008. So this is where the market, this particular candle is where the market actually closed below, and then we are out, right? If we are to be in the market before that time, we are out here, and then we now watch the market start to go down. So that means we won't actually be in the market when all this down was happening, until this particular point we broke above it. Actually, this particular one closed above, although it closed on a red candle, but it was above. Okay, so it's going to count. So we're going to mark it because it closed above. Okay, and then it closed above it, we're going to buy, and our stop loss is going to just be here. and then you see we have gone up a little while, and then take a rest towards the same MA10, and then here this particular one actually broke it, so I'm going to be out. Okay, not totally out because we are coming from below here, this 20, so I'm expecting that it's going to come and hold on this 20, but I'm going to be out for just take out some of my profit. Protecting my profit is very important to me, because if you don't protect your profit when you have gone up this much, it means the person is like, I mean, are you destined for losses? So you have to be able to protect some of your profit, especially when you have gone up this much. So you want to protect some profit, and then watch and allow it to also hold on this 20. Then it now held on this 20, which also brought us into that buying again here. So this is a hold of this particular move, which I said to you that most times it will come to this 20, especially when it's coming from below the 20 MA, it's going to come to that 20 MA to hold, and now started to move, which breaking here caused a total reset. You see, breaking here caused a total reset. So this is within that 2008 when they had the market crash. So we are still going back to see how the market have played out. So all these ones are just a rest that actually happened, but you can still play them same way, similar way. Like here, the market actually closed. The market actually closed below it, so you are out. Although you see, this also is a rest. This also is a rest. This area is a rest of this one that came from below this 20 MA. This is a rest that came from below this, but because it has run up quite a while for some months, once it start coming there, you want to take some profit and then allow it to see how it holds on that 20 MA and respect it, and then when it now continue up. Okay, but that doesn't mean you cannot take up some of your profit. So you can see that it's just consistent in this playbook. Same here, like when it got broken on this particular one, and then we still follow it up here, got broken, but it didn't close above it, so no way we can enter. Here broke, and then we close above it, so this is where we're going to enter the next one, right? And then same thing, continue, then take a rest here, and then continue. You just same, you just keep doing the same. You can just take your time and go through your own SPX, like open your chart and go through it. You can be able to understand what I'm saying. Here also it got broken here, respected here, came back here, close above it, held here, you enter, then rested here, and then continue until break here, then you are out. I mean, it's just the same. You just keep playing the same. This is just the end. This is just the end here. This is the end. This is 1991, as far back as my sorry, my laptop is about to off. So this is as far back as I can be able to go on this my chart. So I think my laptop, I don't know, my battery is having some issues. I don't know, my electricity is having some issues. So now, how do I use this to know where I am in the market? That is the most important thing now. How do I use it to know where I am in the market? So I can see that we are coming from this 20 MA. Okay, we are coming from this 20 MA. Now we are above. We have already reset here, coming from here. So the next thing I'm expecting is a rest on this 10 MA. So that rest will usher us into the next move before we talk about breaking it. You understand? So what we're expecting now is the next, that is the next is the rest towards this 10 MA, which will be the rest towards this 20 MA on the weekly, which will coincide with the 50 RSI. So this is how I know where we are in the market. So once we come there, then I will now say, okay, we are about to get into the second phase of the move. Okay, that's how I know where we are in the market. So now if you ask me where are we in the market, I will say on the weekly we are on the level 1 of the weekly chart, and then on the monthly we have just reset. But you can see when coming from below here, we have done the first reset and rested here, and then we came here, took a little bit rest here and move and reset and rested here. So this one is coming directly from the 20 MA. So the next thing we are expecting is a rest on this 10 MA, and then maybe after the next one, after we take that rest, we can now run up, and then possibly we can break the 10 MA and then reset again. So it helps me to know where we are in the market, what I'm expecting in the market, and when I'm going to be out of the market. So this is just what I want to share with you this morning. Thank you very much.